Welcome back to our third video on the Hawaii income tax preparation. In this video, let's talk about differences between itemized deductions on the federal return versus our Hawaii return, here this form N-11. So if you are claiming itemized deductions on the Hawaii return, they are reported here at the bottom of page 2 in these different categories. Again, these are itemized deduction categories. Or we can claim the standard deduction, these amounts here based upon the taxpayer's filing status, if it's larger, we either want to deduct the larger of itemized or the standard deduction to save more money. The issue, though, compared with the federal, is that the federal standard deduction amounts are larger compared to Hawaii. So let's take a look at a comparison here. So these are federal standard deductions, Hawaii standard deductions for different filing statuses. And as you can see, for each filing status, the federal is much larger than the Hawaii. Now, if you're claiming itemized deductions on your federal, that pretty much means your itemized deductions are going to be larger than the federal and the Hawaii standard deduction. Now, if your itemized deductions fall within these ranges here, you want to claim the federal standard deduction. But on the Hawaii return, you want to claim itemized deductions, which is perfectly okay. Although now you got to do maybe a little bit more calculations on the Hawaii return since there's nothing to calculate for itemized on the federal. Now, if you do claim itemized deductions on the federal, that means you're going to fill out a form or really a Schedule A, and you can see the different categories here. And you're going to see the same category names, but just inserting the totals here on the N-11 form. Now, these totals are referring you back to a worksheet that's in the instructions to this form N-11. And that's where the main differences show up between the federal and Hawaii. So let's take a look at that worksheet. Again, here in the instructions to form N-11. So the first category of itemized deductions is medical and dental related. And basically, we would claim the gross amount that's already reported on your Schedule A, line 1 here. But we know we can't deduct the whole thing. We gotta reduce it by either 10%, or there's some exception for 7.5% of the taxpayer's adjusted gross income. So only the excess gets deductible. But this line 2 is the federal adjusted gross income. So on Hawaii, what we gotta do is insert the Hawaii adjusted gross income. And as we learned in the previous video, there are differences between federal and Hawaii AGI. Now we apply the 10 or the 7.5% reduction to get the amount that's deductible on the Hawaii return back on the form N-11. The next category of deductions are taxes. And the main difference, I guess, between Hawaii and federal is that there's a big limitation for Hawaii in terms of deducting state or local income taxes. If the taxpayers, not Hawaii, but federal AGI, if single is 100,000 or more, or let's say married 200,000 or more, you get to deduct 0 income taxes on your Hawaii return. Now there's no related limitation like this on the federal return. So just with some moderate income here as maybe a single person, you can get 0 deductible income taxes. Okay? So that's not a limitation on the federal return, just Hawaii. But if you take a look at the Schedule A federal, you notice you have a choice here of either deducting the state or local income taxes or the state or county general excise tax. Hawaii hasn't allowed this in the past couple years, I believe because the federal laws always have been changed at the last minute to include this option. and the Hawaii legislature always is working a half year or a year behind after the federal passes rules. So for now, it's just the income tax that's deductible here if you get past this limitation on the Hawaii return. The other taxes here are similar to what's deductible on the federal return. The next category of deductions are the interest deductions. Definitely, if you have a new home purchase, your big deduction is going to be your mortgage interest. So generally, there's no difference between the interest portion here between federal and Hawaii. Although if you take a look at the federal section here on Schedule A, you'll notice a line called mortgage insurance premiums. So qualifying insurance, mortgage insurance, is deductible. And that typically would be reported on the same form 1098. Yeah, okay, so it's deductible here on the federal, but there's no provision for that here on the Hawaii return. Next category are charitable contributions. So it's not listed here or even on the federal return, but as we learned in our class in Chapter 5, there are percent limitations based upon the taxpayer's AGI. The big one is like 50% of AGI is the maximum amount that you can deduct. Anything contributed over that limit is carried over to the next year. That's federal AGI here on the federal return, but you also have to do that same limitation on the Hawaii return, even though you don't see that percent limitation on the forms of the worksheet here. That there's a AGI percent limitation on charitable gifts. Same thing with the casualty theft deduction. That is not calculated directly here on form or Schedule A, but on this form 4684. And we've seen about 2 or 3 different limitations on this form. One of which is you got to reduce the loss by 10% of the taxpayer's adjusted gross income. That's federal AGI on the federal return. But on the Hawaii return, we take 10% of the Hawaii AGI and reduce the gross loss to get what's deductible. The next section is miscellaneous deductions, and the total miscellaneous deductions have to be reduced by 2% of AGI. Hawaii AGI on the Hawaii N-11 return, or federal AGI. Here's AGI for federal, 2% of that on the federal return. There's additional limitations for the overall total here based upon the taxpayer's adjusted gross income again. And there's also a similar limitation on the, I believe, the Hawaii return. Okay, you have to reduce certain itemized deductions if you go over this dollar amount of AGI. So again, all of this then is summarized on the schedule or form N-11 in these different categories coming from the worksheet. You take a grand total, again, maybe possibly reduced based upon your AGI, and then you compare that to the standard deduction, and you're going to claim the larger of the two to deduct. Okay, so this is the third video of 4. The next video will talk about Hawaii tax credits.